we have some absolute blockbuster breaking news hitting the wires today. This is something that is sending shockwaves through both Wall Street and the crypto markets. On-chain data platforms, including Arcom and Look On-chain, have just exposed a massive move by Trump Media and Technology Group, the parent company of Truth Social, which trades on the Nasdaq under the ticker DJT. They have officially moved in a massive chunk of their Bitcoin treasury directly onto an exchange. We are talking about millions of dollars in digital gold being prepared for liquidation. This news is breaking at the exact time that massive macroeconomic shifts is happening in Washington, with Kevin Warsh officially taking over the helm as the new chairman of the Federal Reserve today. So in this video, we are diving deep into the raw numbers behind this transfer. We are going to discuss why a pro-crypto administration's parent company is suddenly dumping assets, what it means for the broader market, and how other billionaires like Mark Cuban are reacting to this current phase of the cycle. So let's start with our very first question about why did Trump Media just transfer $205 million in Bitcoin to an exchange? Right? Let's look directly at the on-chain evidence that was uncovered just hours ago. According to blockchain analytics platform Arcom, Trump Media and Technology Group has officially moved 2,650 Bitcoin, which is worth a staggering $205 million. And that's straight into a Crypto.com exchange account. In the crypto world, moving large amount of tokens from private custody into a centralized exchange typically means only one thing, and that's an impending sell-off. In my own personal opinion, when a massive corporate treasury dumps over $200 million worth of Bitcoin onto an exchange, it is never a random accident. This tells me that Trump Media is facing massive internal corporate pressure. Remember, this company bought a total of 11,542 BTC, which is worth $1.37 billion. Right? And that is Bitcoin at an average cost of $118,522. There. With the price of Bitcoin currently sitting at $77,600, they are sitting at a brutal $455 million in unrealized losses. Right? There you go. $455 million highlighted. In my own personal view as a trader, this is not a statement on the future of crypto policy. This is a company that desperately needs to clean up its balance sheet after an absolute brutal first quarter. So the next question is, how did a $406 million net loss force Truth Social to cancel its crypto ETFs? The latest dump is not the first time Trump Media has lightened its bags. About 4 months ago, they transferred out another 2,000 Bitcoin, which is worth $175 million, when the price was around $87,000. So let's highlight that part. And there you go. But the real story lies in what just happened to their broader digital asset ambitions. TMTG has officially abandoned and withdrawn its massive plans to launch Truth Social crypto ETFs, which were supposed to include Bitcoin, Ethereum, and Solana exchange traded funds. In my own personal opinion, this is where the corporate reality catches up with the hype. The company reported a mind-blowing $406 million net loss at the first quarter of this year, 2026, and that loss was driven almost entirely by the broader crypto market correction and their underwater Bitcoin treasury. So my personal take is that the management team realized they simply cannot run a social media tech business while acting like a highly volatile crypto hedge fund. Canceling the ETFs and liquidating a portion of their remaining 6,888 Bitcoin is an admission that the corporate survival comes before market speculation. They had to pivot, and unfortunately, the market is punishing the DJT stock for it, which just dropped another 16% this month. So, will Kevin Warsh, taking the Fed chair today, create a crypto liquidity crunch? So, let's just highlight that part. Right? The timing of this multi-million-dollar Bitcoin dump is incredibly calculated. It is happening on the exact same day that Kevin Warsh officially takes over as the chairman of the US Federal Reserve, succeeding Jerome Powell after a highly tense near party line Senate confirmation vote. Markets are already bracing for extreme volatility as a new leader takes control of global monetary policy. So in my own personal opinion, I believe Trump media is actively de-risking their corporate treasury before Kevin Warsh make his first official policy statement as a Fed chair. We don't know yet if Warsh is going to lean hawkish or dovish. And when you are already sitting on nearly $500 million in paper losses, the last thing a publicly traded company wants to do is roll the dice on a Fed meeting. So what I can say is that institutions are playing it incredibly safe right now. They are converting volatile digital assets back into stable cash reserves to protect themselves against any unexpected macroeconomic shocks that could come out of the Federal Reserve over the next few weeks. So, the next question is, are billionaires like Mark Cuban right when they say Bitcoin has lost the plot? Alright, Trump media isn't the only giant entity selling right now. On-chain data from Sentiment shows that a massive influx of 9,664 Bitcoin, which is worth over $744 million, has flooded into centralized exchanges over the past 5 days alone. To add fuel to the fire, billionaire investor Mark Cuban just openly revealed that he has sold off most of his personal Bitcoin holdings, stating bluntly that Bitcoin has lost the plot and that he no longer views it as a better alternative to physical gold. So in my own personal opinion, I respect Mark Cuban as an entrepreneur, but I think his take is a classic case of short-term frustration. When major figures in corporate treasuries sell at the same time, it creates a massive wave of retail panic. The derivatives, but for me, this looks like a classic rotation of capital. The derivatives market is showing heavy profit taking, with CoinGlass data pointing to 2.30% drop in total Bitcoin futures open interest, dragging it down to $55.56 billion. When the leverage gets wiped out and billionaires throws in the towel, that is usually when the market conditions begin to bottom out. It is painful to watch in the short term, but it is necessary cleansing of the market. Our next question is, what is the ultimate survival strategy for regular investors right now? Trading volumes are down by 7%, indicating that every traders are temporarily losing interest or hiding in cash. So in my opinion, my strategy right now is to let the giants fight it out and wait for the dust to settle. Trump media selling off assets to cover their first quarter corporate losses does not change the underlying global utility of blockchain technology or the long-term infrastructure being built. This is a corporate liquidity event, not a death sentence for the asset class. I am keeping my eyes locked on exchange inflows. Once this wave of corporate liquidations slows down and the market absorbs the $205 million dump from TMTG, we will establish a real macro floor. So don't let the headlines panic. Don't let the headlines panic you into selling your long-term positions at a loss just because a publicly traded company handled their treasury poorly. So we need to stay disciplined, monitor the macroeconomic changes with the new Fed leadership, and let the weak hands shake themselves out. And this finally ends our video. Thank you very much for the watching. Thank you very much for watching this video, and see you on the next one.